What's up, Trading Wars Army? Welcome back. Hope you guys are having a good day. Today, my friends, we're going to be talking about scalping. I'm going to go back to the very basics today. I had a lot of requests, and I'm going to keep it extremely simple for you guys today and just show you what I was able to accomplish. So I was able to walk away with $6,224 in my P&L, guys. Obviously, my size is probably not going to be the same as yours. So, don't expect to get those gains right away, especially when you're starting. But I want to show you the strategies that I use because the strategies can be applied with any account, any size, right? Strategy stays the same, whether you're trading one share or 100 shares. So if you're ready, my friends, let's step into the war zones. First and foremost, some shout outs. Anthony, Trading Wars Army, G-Man, Omar, Bill, Trading Wars Army, Omar, Johnny, Briggs, Harry, Dr. D, Hennock, Common, STK, Trading Wars Army, good to see you. Hellshock, J Sosa, what's going on? Ed, Omar, what's going on, brother? Good to see you. All right. All right. All right. Hit me with the one if you can hear me loud and clear. I do have a different setup today. Wesley, Isabel, good to see you. Trading Wars Army. All right. And what we're going to do here, guys, is let's just go to the basics. Okay. So on today, we took a trade on Google. I'm just going to go to the Twitter and I'm going to show you Google. So Google, we made 2,374. Okay. When I closed the trade, it was a little bit higher than that. But what I want to show you guys here is just, first of all, starting off with the basics of scalping. Okay. So one of the things that I like to do first is actually look at the daily chart. Okay. So what I'm going to do right here is I'm going to replay today's price action and I'll show you where we entered the trade and I'll show you why I was focused on Google. All right. So one sec here. I'm just going to replay this day and I'm going to go to the daily chart. So everything for me, guys, starts off with the daily chart. The daily chart is very important because the daily chart shows what type of day the next day can be. So I am a trader that uses candlesticks very heavily in my trading. So if we look on this chart for Google, you could see on Monday, we close with this yellow bar. So what is the significance of this yellow bar? This yellow bar is an inside bar, okay? So an inside bar, my friends, is when the whole day's range traded within the previous day's range. So visually what that looks like, I'll go down to a 5-minute chart for you, is we have a contraction of price action, right? So this is all the movement from Friday. Here's the movement from Monday. So if I take a rectangle, what I like to visually look at this as is a big box and a small box. So here's our bigger box, right? Let's put this in yellow. And then here is our smaller box that traded on Monday. So if we visually look at this, guys, the price action is just getting tighter and tighter. And for those of you familiar with charting patterns, this right here is a flag pattern, okay? And you can see that the price is reaching a pinnacle. It's reaching a climax. So what does that really mean? Hit me with, I want to ask you guys this. I'm going to go in a little bit more detail right now. But hit me with a 1 if that is clear. Hit me with a 2 if it's not, because I'm gonna try to explain something like I was explaining to a newborn baby. Okay, not saying you're a newborn baby, but what I'm saying is that some people here are new to trading, and I want to make sure I'm very clear. So what that means, guys, is let's just take this measuring tool. Okay, on Friday, Google had a price range of $2.72 from the low to the high, roughly $2.72. Okay, 2.69%. But then on Monday, the price range was only $1.62 or 1.6%. So what I'm showing you there is the price movement is getting smaller and smaller. And when it gets smaller and smaller, it visually looks like an inside bar. Okay. And from there, what our goal is for scalping is saying that this box cannot last forever. This tightening of this range must actually expand, because generally in price action, when you're trading price action, especially when you're scalping, the range the price will not get tighter and tighter and tighter forever. At some point, it will expand, because as it gets tighter, more people get trapped in trades. So, for example, all right, hit me with the 3 if that makes sense. And what I'm going to do now is I'm going to explain it how I see it from a short perspective and a bull perspective. Okay. Okay. So from the bull's perspective, they were buying in this area down here. Okay. So let's put that in green. So we could see all the way up to here, these were bulls buying. They were buying over here. So they're around $101, 115, back in the $150. They're buying over here because you could see the wicks. You could see them pushing up every time we come down here. But now let's look at the bears. So the bears we're shorting from a high of 103.47. Let's put this in red. And then you could also see that this zone went all the way to about 102.50s. Okay. So what we see here is sellers are interested up here. The buyers are interested down here. Hit me with an 11 if that makes sense. Okay. And then from there, we could take it one step further. Okay. So let's take it one step further now. Now I'm going to show you one more layer to add. We're going to add the Fibonacci. All right. So now if we look at the Fibs, let's do the Fibonacci's. And then the Fibonacci will also tell us a good story. Okay. So from the bears perspective, this was their anchor where they started shorting. So if I take a Fibonacci from my high to the low of the last leg right here, you can see the bear loaded up on the 618. And you could see how beautifully perfect this is because the bear shorting on that 618, the initial short started up here. One thing to really look at here is understand that the bear actually made a new low in their sequence. Okay. And you can see this is about a 10% new low. So the bear has actually shorted multiple times from based on this Fibonacci and has achieved some type of target. All right. Hit me with a 19 if that makes sense. And then what I'm going to do is I'm going to switch it now and look at the bull. So that's the bear's picture. So the bull, we had this initial push up back on Friday. And then if we take our Fibonacci from our low to our high, what we can see is the bull is constantly loading up on the fibs. So here's our gold. Let's draw the golden zone. So the golden zone is from the 50 to the 786, right? That's something that I just created over time with the zone. So they've been loading in the zone. Their max stop loss has been down here for protection. You could see that it came very close to stopping out, but they stepped back in. All right. So hit me with a 7. So what I did right there is I try to paint the picture of what's been going on in the last 2 days in Google. So then when I see this type of price action, my job is to come in here and say, okay, I believe based on the setup that this price range will expand. So what do? I go on YouTube and I post you guys my levels. Okay. So Google, I wanted to go along above 102.40 and short below 197. I also posted on Twitter. So please make sure you subscribe and hit the like button to support this because I do this every day. So these are for my regular subscribers, guys. I post these every day. Don't forget to drop a like. All right. And also for the Trading Wars Army, I post bonus picks. So if you want to upgrade and join the community, it's $4.99. You get these picks as well. But anyways, let's go back to Google. So 102.40, that's our long. So now I'm going to draw this up. Okay. Double click, put this in green. And we're just going to write here, long trigger. So we're looking for either shares or calls, whatever you want, whatever tool you are, depending on your size of your account, depending on what you like trading, you can hit it with shares, options, futures. There's many options. Okay. And the short, let's go back here, was 197. Oops. Click here. 197. Double click. And we'll put this one in red. And then we'll put this as a short trigger. Okay. All right. So now we have our chart marked up. Okay. So let's go ahead again and let's draw our box. So here's our big box. Here's our small box. Here's the price action getting tighter and tighter. Okay. So let me put this over here. And then we'll also draw in the flag. Okay, there's the flag. Okay. So I like to do my charting like this. So now we have the price action ready to go. So what are the 3 possibilities that can happen from the open on Tuesday? So we talked about this yesterday for anyone that stayed tuned. So what are the 3 possibilities that can happen on Tuesday? Okay, what are they? What type of opens can we see? So what we'll do here is we can start drawing the candles. Okay, so I'm going to just move these over here. Okay, so the possibilities are we gap up here. Okay, so that'll be our gap up candle. We open inside of the range. And the final option is that we actually gap down. Okay, so there's our 3 options. So if we gap up, what are we going to look to do? If we gap up, we're going to look to retest this level for our long. Okay. If we gap down, we're going to look to retest this level and then short. Okay, this is based on the trigger approach. However, if we open right here on the middle, then it can go either way. It can break through short, it can break up long. Okay. So hit me with the 17 if that makes sense. So that's basically the three scenarios that can happen. All right. So what we're going to do now is we're going to play the first candle. So the first candle, what scenario is this? What happened here? What happened here? So we open inside, right? And we broke to the upside. Okay? So we're filled long as soon as this level pierces. And what we're trying to do is we're trying to get out of this. We're trying to break the box. So we already broke the small box. There's a small box. Let's put this in a different color. The small box is already open, broken through, and then we have the big box up here. Okay. So we go sideways for a little bit there, consolidate a little bit on the level itself. So showing support. And then finally, guys, boom, breakout. See that? And you notice how we come to the top of the box here. We break out. We resist a little bit for anyone that was still shorting. Fast forward here, guys, and then we're gone. That was a beautiful trade. That one was really, really nice trade. So hit me with the 15. So on that trade, that was my profit. Okay. I actually made a little bit more than that because that was during the regular hours. So that, my friends, is what I call a trigger. Very simply playing two levels, but understanding, first of all, what is the price action that happened in the previous 2 days. Okay. Do you guys like the candles? Hit me with a 10 if you like the candles. Hit me with the like button if you like the candles, because I'm trying to draw some more user-friendly things. And what I'm going to do here now is I'm going to show you now just basic candlestick patterns. Okay. So if you don't want to do the triggers, you can do basic candlestick patterns. All right. So the first thing is you want to add my Trading Wars golden indicators. These are my free indicators. It'll automatically highlight the inside and outside bars. You can also get it right here, tradingwars.com/resources. Just scroll right down there, Trading Wars golden indicators. Okay. So this one I hit with shares. I generally like doing shares because I like to go with big size. So I like to do shares. When I started off, small account, I did definitely trade options. But, as you get bigger and bigger and with commissions and different things, sometimes shares might be the better option. That's what I like to do. But definitely I did do these with options back in the day. And you definitely can too. Just make sure the spread is good. Okay. So let's look at the basic patterns here on this chart. So this was the 930 candle. All right. And what we can do here is we see this double inside bar. So in my indicators, we have the Trading Wars Golden Indicators Premium with alerts and the Nirvana. These ones, if you want the premium versions, all you have to do is buy the book and you'll get these for life. Okay. But what I wanted to show you here was we have this double inside bar pattern here. Okay. At 9:45. Hit me with a 6 if you see that. And what the job of the indicator is to highlight those patterns for you. Okay. So here's our double inside bar pattern right here. And we have to ask ourselves, is that double inside bar pattern significant or not? So how do we determine that? Well, one of the things I like to do is use a Fibonacci. So if I take a Fibonacci from our low to the high in the morning, you could see how we touched this 618 and the 618 was showing this bullish power right here. So this double inside bar is placed in a good spot because we have the Fibonacci there to support it. So how do we trade this? All we do is we bracket the bar. If it breaks the high, we want to go long. Okay, that's it. Because we're seeing the bullish power here on the 618. Say once that high is broken, we're going to take this long. And what we're going to do is put the stop loss right there for protection. So that's how you can do a bar by bar approach. All right. So if you don't want to trade the trigger, you want to trade the pure price action. That's how you do it. And then let's continue. So now we had another inside bar. Here we go. Inside bar. This is on the 20 EMA Bollinger Band. I don't really use that much, but I know some of you do. So again, just take the break above right there. Then we had our outside bars. The same thing, outside bar here. This one particularly, I wouldn't like to trade it because, it's kind of like in the middle of nowhere. It's near the high. But this one is a really strong one. Again, 20 EMA touch, if you guys like that. But what I really like about this is that long wick. So you're showing that buying pressure right there. Again, entry above the high. All right. So, even later on in the day, we have this inside bar. So this one again is kind of in the middle of nowhere, not really a good trade. But this one right here, this outside bar near the high, you could see this one was really nice because this was the high of the day at the time. So the bears tried to short it right here and pull it down, and you could see they did have a good run, but the bull stepped right back in. All right, so that's basic candlestick trading. Hit me with a 10 if that makes sense. All right, and you guys can add my golden indicators, and those will hook you up with those levels, and just highlight the patterns for you. And guys, look, that's pretty much what I want to focus on today. This is going to be part one of many more to come. Just the very basics. I want to speak as in the basic terms that I can, because I just really want to get back to my roots. And the roots is that I'm a teacher and I love teaching. Okay. And what I want to do right now is, for those of you that want to automate this trade, what I'm going to do is I'm going to get you guys to just click on this link with me. And we're going to go to the video, and I'm going to show you just a quick guide that I have put together with Interactive Brokers. Okay, so 1 second here. All right, so if you're watching the video right now, all you need to do is scroll down right here, hit show more, and just click on conditional orders right there. So click on that for me, guys. Let me know where you're on the page. Hit me with the 15 if you're on the page. All right, and what I'm going to also do is just hit me with 15 when you're on the page. Yeah, I just your account size definitely matters. I try to risk maybe, up to 5% maximum of my account on trade. I don't like to risk more than that. But shares is just more, there's no Greeks to deal with, right? So if I buy it, let's say I buy it at 102.50 and I sell it at 105.50, that's $3 a share. And it's that simple. There's no other implied volatility, et cetera, et cetera. There's no premium. And it's sometimes the simplest things that make you the most money. Okay. All right. So what we're going to do right here is on the conditional orders. What I really want to highlight, please watch this video when you can. This is from Interactive Brokers. But the key is, this is the key right here. So when you place the order in Interactive Brokers, just want to hit modify condition. And then from here, this is where you get into the fields where you can add your criteria. And you can do this based on anything you want. You can do this based on price. You can do it based on time. You could do it based on another stock. You could say, hey, buy me Google when SPY is above $100 or something like that. There's some pretty crazy things you can do on that. I also have a full video tutorial on that right here, how I enter Fibonacci option orders right here.
Check this out, right?
Oops, let me just copy that and check that out. Oops. Copy, paste that over. Check that out, guys. All right. Check that out. All right. That's it, guys. Thank you very much for your time. I'm going to do some scans right now, but as always, check me out at tradingwars.com. If you like what you learned and you enjoy my content, please consider grabbing a copy of the book. These are my best sellers: the Golden Partnership Fibonacci, the SPY book, and the Stock Options book. Normally it comes with 1 month for free, but I've been telling everyone, if I do well in the markets, I'm always going to hook up the people that support me. So what we're going to do today, and probably I might do it for the rest of the week, is instead of getting 1 month free with the book, you'll get 2 months for free. So instead of 30 days, you'll get 60 days in the Discord. So I don't do that too often. So take advantage of it if you guys want to get in right now. So you'll get 60 days, and you'll get our Nirvana indicator and our golden indicators for life for free. And as you guys know, we go live in the market every single day. We have our Fibonacci's, so it's a pretty good community that you can come hang out with us on. And then stuff like Google, I see a lot of you guys are asking about the plans. So this was the Google plan shared yesterday, our long entry stop and our target plus the options. If you're interested, that's in the stock channel. These templates can be used for full automation. So how did I find Google in the first place? Well, I use certain scanners. Trendspider is one of my scanners. And you can see right here, I have different criteria that I scan for. So right now it's scanning for the blue raindrops. So let's see if there's anything that really stands out right here. I don't think there will be any blue raindrops because our blue raindrop is more of a consolidation pattern. And with that consolidation pattern, when you have a big day like this, you don't normally see any of those, right? So I use this scanners right here, guys. And you could see right now it's scanning. It's a little bit slow, but these names, I don't trade them. So I always combine the scanner plus I got to see good names, like names that I like to trade. So tech, high volume, things like that. Okay. So that's pretty much it, guys. If you want the Trendspider hookup as well, I have my indicators on this chart as well. If you use Trendspider, you want to get my scanners for free, just let them know. I think it's hello@trendspider.com, and or let them know, DM them, send them an email, and they can convert you over to Trendspider with all of my stuff for free. All right. Otherwise than that, thank you so much for your time. Please comment, like, subscribe. Let me know if you like this new learning style and this new training style, this new teaching style I'm doing. And I'll continue to really break things down on a micro level and as very, very detailed as I can. So thanks so much for your time. Don't forget to comment, like, subscribe. Check out the book deal if you're interested, guys. And I will see you on the other side. Take care.